Buddy, welcome to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso, the full crew with you this morning. Hope you all had a great weekend. We are back in the saddle. What's going on today? Let's take a look. See, we got Jeff Hirsch, the author of the Stock Traders Almanac. He'll be on, I guess, about 9 o'clock or so to talk seasonality. That'll be fun. We'll have Mr. Ian Cully on to talk about gold. What better time to have Ian on than today? I don't know if you guys have seen what's happening in the metals and the miners and the commodities recently, but there's some action there this morning too, for that matter. We'll talk about that. I have a couple earnings on my radar as well. Steve has charts on his mind. We'll find out what those are in a little bit. And that's the rundown, more or less. So good morning, chat. Good morning, Dawson, Phil, Jonathan, Ravi, Mary, Mark, CC Bus 1. I don't know what GM. I guess good morning. All right, Joel, and Joe. Hope you all had a great weekend and hope your Monday is off to a great start. But let's get this show on the road here. Come on now. Where's my morning intro bumper thing video? Can't even.
Hey now, Earthlings. Happy Earth Day.
What now?
We're all Earthlings,
that's
and
today,
today is
right?
Earth Day. So are we all celebrating Earth?
Aren't you supposed to go plant a tree?
I think so. This year's Earth Day motto is planet versus plastics.
Wow.
Yeah. I mean, I'm bullish Earth.
Yeah, I walked by a little pop-up festival, got some free rosemary over the weekend in honor of Earth Day. So,
dude, free rosemary. Come on. When you walk around Sonoma, they got rosemary bushes everywhere, like everywhere.
Okay.
In my house in Sonoma, we had like 3 rosemary bushes right in the front lawn, 2 in the back. I had more rosemary than I knew what to do with. So imagine just being able to just walk outside at any time of the year, cut out some rosemary and throw it on some steak with some butter. It's crazy,
there you go.
dude.
That's a good way to celebrate Earth Day. Put rosemary on a steak.
Dude, Earth Day is a great day, man. You know, Earth is cool. I'm into it.
So are we.
Yeah.
How was everyone's weekend? Good? Yes?
I had a fantastic weekend.
I didn't hear from Strazza once all weekend.
Great weekend.
That's why it was a good weekend.
That's why it was a weekend. All right, why don't we got a lot to talk about. Why don't we hit that bumper, buddy?
Yeah. JC, we missed you on Friday. You feeling better? A little bit?
We're getting there. We'll live.
We're getting there. All right.
Kids, man. Kids in the hospital all weekend, dude. Never ends.
Oh, man. What a mess.
You'll see, Spencer. You'll see one day.
All right.
All right, let's do a quick little rundown. We got the Dow futures up 200 points this morning, Spencer Israel. 200 on Earth Day. Getting the week started on the upside here. That's about 0.5% to the upside. 38,400 for your Dow Jones Industrial Average futures here. S&P futures hanging on to that 5,000 for dear life. Up 40 basis points this morning, about 22 handles. So we're looking at 5,026 right now for the S&P 500. NASDAQ futures also up about 0.5%, up about 80 points this morning. What do you know? 30-year bond futures down again. I can't believe it. It's almost like if that's like a trend or something. Bond futures go down every day, hanging on for dear life to that 114 level on the ZBs. That's the 30-year futures. All right, moving on to metals. Gold taking it in the chin this morning, down 2%, 23.60 for gold futures. Silver down 4%, all the way down to $27.50 per ounce. Copper actually flat on the day. Continuing to see that relative strength out of copper. Really interesting. Crude oil down almost 1%, 81.5, down 75 cents this morning. And dollar slightly higher in early trading, particularly against the euro and the yen. Volatility hanging on to that $18 level, Spencer. Volatility remaining elevated You want to continue to take advantage of that. And then you got Bitcoin over on the funny money, up 1,000 points today. Got to tell you, we're going to talk about it, but got to tell you, very impressed with how Bitcoin has held up over the last couple of weeks. Really, really impressed, actually. So that's what I say. Bitcoin up 1.5%, about 1,000 points to just under 66,000. And then you got Ethereum 3,200 up 2% on the day. Total crypto market cap, Spencer Israel 2.35 trillion. Solana hanging around 150, also up 5 points on the day. That's your morning rundown. How do we feel?
Listen, despite seeing some downside in price over the trailing really 7 sessions, the way that risk assets have corrected has been very constructive. Bitcoin, like you were just saying, is a great example of it. And I was asking Spencer last week, JC, you weren't here. You have some short positions, correct? Currently open?
I don't have any short positions open, no.
Perfect. So if I'm short, which I'm not, but that's how I'm thinking, aren't I covering last week, today? Like, this is a counter trend move, right? So most short sellers are aware of that. Where are they taking profits? How much more are they trying to push this? Would you enter new shorts here, or are you more likely to cover shorts here? We got downside, right? Breath was shit. Everything was falling last week for the most part.
Yep.
Shorts were covered. So I don't know how much. Again, this is counter trend. This is a mean reversion trade if you were short. I don't know how much you want to press the gas here. So I think a nice little reprise from the bulls, a little bit of a comeback rally this week. We'll see what they can accomplish, what kind of damage they can repair. There is a good deal of damage, tactical damage to repair out there. So let's see. I think the bulls are going to take their shot though here this week.
Yes, and then I think they'll get knocked down again.
Yeah, maybe.
And then hold on. I think you're right. They'll shoot their shot. They'll get punched in the face again. A little Matumbo action, one of those kind of things. And then they knock them down again. Then they bring them back. And I think the chop continues, right? So the bet that I want to make is that chop, is that you're right. And then Matumbo comes in, and then you're right again. And then Matumbo, right? So like that chop, these are traders that don't have any patience. Yep. They lack discipline, right? Like those traders, like those are the profits that we want to take away from them, right? They're making donations. It's up to us to take those donations and keep them for ourselves. And the way that we do that is by selling options. So on ETFs, we're selling strangles naked. On individual stocks, we could put on a condor so we can hedge that trade, sleep better at night. Those are the trades that I've wanted to put on for several weeks now. Coming into this week, those are still the trades that I want to put on. Those are more delta neutral trades. They're not directional trades. A lot of investors are coming in trying to make directional trades, being like, oh, that was the correction. Buy everything. Great. Sold to you, right? Oh my God, the market's going to crash. Let's buy puts. Great. Sold to you, right? So that's my mindset as we speak.
So
you like that mindset?
Yeah. So any new positions that you're maybe entering in this environment, the last few days, the coming few days, we'll have a trendless bias.
Yeah, and by the way, this is not something that you'll ever hear on like basic cable, right? Like on basic cable, like they're talking to you like if you're too dumb to do that. Like that's too complicated to do. So on basic cable, and I know this for a fact because I've done all these basic cable networks, literally all of them for many, many years. They'll say you can't say that, JC. You have to pick a direction, JC. Oh, you don't like that? Well, then give us something you do like, JC. That's how these producers talk to me, right? That's why nobody's watching these channels. That's why I'm surprised some of them are even still around. Actually, it's very impressive how really bad some of this content is, yet they're still around. So just understand, you're never going to hear that ever on basic cable.
No, right? You're going to hear strong directional opinions,
right?
Always,
and that
right.
Why wrong so often, right? Because that's impossible.
That's why. Because that's what the people want. So it's sort of.
So they're not giving the people what they need to hear. They're giving the people what they want so they can whore themselves out to their precious sponsors and sell their pharmaceutical ads or whatever penis pills they're pushing that week or whatever,
Yeah. So what do you need to see? So new positions will have a sideways bias. What do you need to see to enter new long positions? Like, is it still not time in your mind to enter new longs with longer time frames in mind? buying dips in a bull
We
market.
talked about this last week.
Yeah,
And
I
by
know.
the way,
Last week.
we're gonna publish the meeting from last week because I think it really adds some value and give you some perspective as to how we think as a team. But I am looking to enter some bullish bets where I can sell some premium to help pay for those bets. I'm just not there yet. I haven't really seen anything. I've been looking around. I'm being really patient. I'm the old, boring man in the room. I don't need to be in a rush. I'm not going anywhere. I got all the time in the world. So I'll just collect income until I think it's time to make a better directional bet. And that time is just not now. And I'm just going to keep collecting income. I mean, that's really where my head is at. And this could last for months. Maybe it lasts only a week more. I don't know. We'll see.
Charts on that.
But I'm being very patient. Very patient.
Yeah. All right. Great.
Yeah.
All right.
That's
let's get back to the
probably
funny
the
money
biggest.
because I think this is a key point.
Yeah.
Go to throw the Bitcoin up because we had the old halving, right? And there was a great meme that I saw last night where it was the movie Wolf of Wall Street where what's his face DiCaprio and what's the other one
Jonah Hill.
Jonah Hill. They're sitting on the couch and they're like, after they took the Quaaludes and they're like, you feeling anything? You guys feeling anything? Like, you know that scene?
Is that what last night was for you?
Well, not for I don't do drugs, but for Bitcoin having people that like haven't gone back and actually done the math and it doesn't actually matter. And they, they're all excited waiting for like this magic thing to happen after the halving. And then it's like, okay, that was it. No, big deal, right? So I just thought that was an appropriate sort of meme. I mean, this is the memification of society. We're seeing it. That was funny. Well done, whoever did that. It's the demand side of the equation, folks. It's not the supply. 93% of all the Bitcoin's already been mined. So the rewards are now half of whatever's left, which is almost nothing. Like, it's not going to have a material impact on the supply and demand dynamics. It's really coming from the demand side and the flows into the ETFs that are pushing that. And, that has certainly slowed down after a record launch for ETFs. And and again, incorporating patience here, waiting for a resolution. Maybe it happens this week. I doubt it. Maybe it happens this quarter. Maybe next quarter, maybe next year, right? I have no idea. I'm going to wait. I got to see it. Kind of like in the stock market, Strazza is like, what do you need to see? It's like porn. You know it when you see it, right? I don't know what it's going to look like, but we'll know it when we see it. Feel me?
Yep.
Shout out to one Louis Sykes on the show on Friday. It's almost like he was right when he said this stuff don't really matter. And he's been saying that.
He uses math. That's the thing. So it's like cheating, like if you actually count and use the math, like, of course you have a higher likelihood of being right? It's the people that don't use the math that they make their lives more difficult. Like, that seems a little silly.
I think we're doing a disservice at a certain point by continuing to bring this up. I've had having muted on my Twitter for 2.5 months now.
Well, it's over until the next one.
Good.
Yeah. Was it as good for you as it was for me?
I have no idea what happened or who said what about it. But
can we talk about how shitty these small cap stocks are? Go to slide 2 there, Spencer.
I suppose.
Look at this. Come on. Look at this. This is how bad things have gotten for small caps all year, right?
They've
just getting progressively worse. What?
Things were bad coming into the year. They've been bad all cycle.
No, you can't say that. They ripped for 2 months, dude.
Q4, they had a nice Q4, and it's been shit since. So they had like 2 good months there.
Right.
It's not like this was an area that was working that started not working. This has been
this is an area that started to work, that people were convinced was going to continue to work, and it has not.
What people?
Come on, bro. I've been hearing all year about how small cap breadth is improving. Things are getting better in small cap land. And then I go and actually count, and as it turns out, it's been the exact opposite.
If this was the S&P 500 sectors, and you could say, hey, all of these were working and trending well, and now they're not, that would be a significant data point. It's a lagging index, and all these lagging small cap sectors never really started working in a material way or a sustained way. and they're still not working. It's kind of like more of the same. So this
Right.
is still a very thin bull market, and it's getting late to be this thin. So I think with every passing day, this becomes more and more of a concern. But it's not like this was deterioration from some higher level.
Yeah, this is a shit group that's just stayed shitty. They had like they had a very nice bounce, by the way, from October and
Yes.
early November, and they ripped into the end of the year. And then on December 27th, a lot of things changed. This obviously in particular. How about small cap tech down 13%? And look no further than the bond market crashing every day, right? That's what this is, right? Technology has a lot of exposure to higher interest rates, right? Those longer duration type stocks get hit as interest rates are going up. And then, correct me if I'm wrong, but for my funny mental friends tell me that the small cap companies are the ones that need to borrow money the most often. Interest rates going up, not good for small cap. So when you add both of those together, small cap tech is probably the worst possible thing in an environment that rates are ripping and bonds are crashing every day. And as it turns out, that's exactly what has been taking place, right? Is that all right?
So it's just a cost of capital situation, right, for a lot of these guys. And you could see it. You could see the relationship. You overlay ARC or XBI or small cap growth tech indexes
Same idea.
with interest rates. You can absolutely see it. So the companies that don't need capital will fare much better as rates rise. But the thing is, the major averages can do just fine because big cap tech can come back to the forefront as leadership again, because these are companies that, for the most part, are printing money and don't need capital at all, which is a lot different from tech of the old days, right? What is it that you say? Like, this is not your parents' technology. This is not your parents' tech stocks. This is very different from the dot-com bubble. These companies are insanely profitable. Very different.
Wait,
20 years.
can we go back to that chart just real fast? Because you could see clearly that there's rotation happening there. Should I? Am I looking too closely into this?
I don't know if there's rotation. There's just like deterioration across the board.
What rotation,
Rotation would be one. You'd see a bunch of lines going up and a bunch of lines going down.
I don't know. Look at what was leading in January. Look at what's leading now. It's not the same.
I don't know. What was anything?
What was leading in January?
I'm looking at the left side of this chart, and I see energy at the bottom. Okay, and now energy's at the top.
Yeah, energy got going. What, February?
Energy,
right?
Yeah,
I'm seeing industrials near the bottom, and now industrials near the top.
Maybe materials too.
And materials too, and then technology is just getting progressively worse.
I'm seeing technology. I'm seeing technology at the top,
right, Spencer?
And now technology at the bottom.
Right. That's on a broader sense, right? It doesn't have to. It's not just small caps, right? You could take that up the scale, right?
So the answer to my question is I should not look too much into this.
No, I think the answer to your question is you knew that already, right? We've been talking about that, particularly from the large cap standpoint, the rotation into commodities and things like that, right?
Yeah.
Yeah. What about this one? This is a good one. Go to slide 2, Spencer. So this is the 4-year anniversary.
Oh boy.
Of when the bright minds over at CNBC now, I guess, whatever that is, they they're telling us
right,
that crude oil fell
that's right.
300%. Imagine
something.
Yeah, I do. I remember
how does
that
work exactly? How does
it was 420? I remember that.
How does that work?
JC has a good analog. The one about the stripper?
Has a good analog,
or the one about the prostitute?
Oh yeah, you want me to read that to you? You think it's appropriate?
It's the only way to make sense of it.
I know. It wasn't me, by the way.
No.
Yeah, I don't remember where it is. It was such a great explanation. I gotta find it.
You tweeted it. It's on your Twitter somewhere.
It is.
We'll find it. So you wrote about it. Yeah.
I just thought it was the best explanation. Here we go. So this isn't from me. This is from somebody else. All right, you guys ready?
Yeah.
So JC is going to describe the situation of negative crude oil using a crude example.
Yeah, a crude example. Right. This is a crude example. So people are like, how did it trade below zero? So this is the best explanation. So if you're sensitive to things and you're easily offended, you can leave now. You're probably in the wrong show anyway. All right. Earmuffs, kids. Ready? So why did WTI crude oil trade at minus $37 a barrel? Imagine the following. You pay $500 today and commit to receiving an escort at your house in 15 days because your wife is traveling. This is called a futures contract, right? So your wife is traveling. You want an escort, 15 days from now when she leaves, and you pay $500 today. Okay. Unfortunately, lockdown came and your wife will actually be home for the next 60 days. Okay. So now, obviously, you do not want this woman to show up at your house at all. And you want to try to pass this futures contract over to somebody else, obviously, right?
But everybody's wives are home because it's a pandemic.
Oh, hold on, settle down. But you can't sell the commitment because nobody can receive the escort at the home anymore because everyone is already in full storage, their balls, with their wife. To make matters worse, not even the pimp, the Chicago Mercantile Exchange, in this case is the pimp, not even the pimp has more room to receive girls because his house is crowded with girls. So you will pay anyone just to take the girls off your hands. Now you understand why crude oil traded at a negative price.
You're paying
when that
to sell
contract
it.
was delivered.
Yeah, it was a storage issue, right? It was a storage
That was
cost.
probably the best explanation that I read, as somebody who's like not,
So
too
just
much
to
math gets
just to
makes my brain
recap,
hurt.
normally if you sell something, you expect to receive money for that, right? If I give you something, you give me money. In this case, storage was at zero. You're so desperate to get rid of it, you said, "I'll give this to you, and I'll pay you money to take it." Right? I will
Make sure
pay
the
you.
escort does not show up at my house. My wife is
Right.
home. Right. I thought that was brilliant. I wasn't smart enough to write that. I don't know who did, but it was circulating around 4 years ago, and we're bringing it back. It's a good
Decent
lesson.
analogy. Decent
Educational.
analogy.
Don't ever say the show's not
a great
educational.
analogy. I mean, listen, it certainly helped me understand, and I'm not like, I'm not that great at math. I like the simple things, but could be a little bit complicated.
Well, happy anniversary, crude oil.
Yeah, happy anniversary, crude oil. For sure. And one of the things that Strazza asked me is this one, and I want to bring back this oldie but goodie. Throw up the new slide too, Spencer. Strazza's like, all right, JC, what is it going to take for you to start, putting on long positions again and everything like that?
Yeah, I like this. Good.
It's a good one. This is a good one. In healthy market environments, high beta tends to outperform low vol.
Yep.
Right? Low volatility stocks tend to do better when stocks are under pressure, right? On a relative basis.
Sure.
That ratio is flat.
Yep.
Corporate bonds are essentially the bond market's extension of the stock market, right?
Yep.
You can argue. Again, flat all year. And then the small cap index, this is the S&P 600. So it's not the IWM that lets anybody in. This is the S&P 600 that needs a track record of earnings. Again, flat for the year. So some breakouts here, I think, would be incredibly constructive. And to be clear, these 4 or 5 month consolidations have taken place within the context of longer term uptrends. Maybe small caps not so much, but some of these others have been trending higher. Right?
Yeah, it's important context.
You agree with this one?
Yeah, I like all of these charts. I think this is a good roadmap for when the corrective action ends, right? These lines are all turning around. But I also think that we need to be careful, at least with the high beta, low vol. You're still seeing very little in terms of defensive leadership. We had about 4 days of defensive leadership. I wouldn't, overthink it quite yet. Right? SPY.
Yeah, I mean, listen, the big theme here is such a massive percentage of stocks that are above their 200-day but below their 50-day. That's basically what this chart shows. Kind of longer term uptrends, intermediate short term sideways trends. It's about right, isn't it?
Yeah, let's talk about some of these breadth charts. I brought some along.
What'd you bring? Show me.
So let's start with the Hurley chart, because JC loves the net new highs. We use the middle pane here. Now, the one with the 2 bottom panels. The 20-day new highs and the NYSE net new highs. Yeah. You could see a little blip in the middle panel where net new highs flip negative. That means there are more new lows and new highs, 52-week closing basis for like a couple days last week. We are looking for what's called a fall day since we're in a breath thrust regime right now. The next signal that we're going to get from market internals will be a fall day. While the price action felt, there was some aggressive selling in the past 5 to 7 sessions. From a breadth standpoint, this is nothing, not even close to what we need to see to start to worry. So while JC, you're right, breadth has been deteriorating. It hasn't got to any sort of extreme level where it should really raise our attention for the next market internal signal. I hope I explained that well. We got the thrust, then we need some sort of fall day or a cautionary warning signal of breadth deterioration. Then we prepare for a market top. We're not there yet, right? We're still in stage 1 coming off of the thrust. Would you agree with that?
Yeah, why don't you throw up the new slide too, Spencer?
You could show it in the new lows chart also if you want to flip to that one after.
Way ahead of you, buddy. So this is the New York Stock Exchange, which in my humble opinion is the world's most important stock exchange. Strazza likes to argue with me on that, but
no, I wouldn't disagree with that.
Oh, we're back. Okay. So the New York Stock Exchange is now back at the most important.
It's the best for information. I don't know if it's the most important for people's money.
Oh, no. What is it? Is it the Malaysia Borsa? Which exchange is the most important?
S&P 500 is the best.
Philippine Stock Exchange? Is it maybe the Ho Chi Minh Exchange that you visited? Is that the most important one?
Oh, cap-weighted index would be just the best representation of people's portfolios.
So again, I'm not talking about an index. I'm talking about an exchange. These are two different things.
Sure.
Right? So this is an exchange, the New York Stock Exchange. Now, the composite itself is an index, but I'm talking about just the stocks that are in the New York Stock Exchange, right? Like, the files are in the computer.
Got it. Right? Yeah. So say more.
I'm seeing what does it mean? I'm seeing the most amount of new 10-day highs that we've seen in quite some time. Most amount of lows, Freudian slip.
Zoom out on
10-day lows.
Give me a break.
Seen in some time. Most 1 month lows that we've seen in quite some time.
I can't.
And that's it. Right? Like we haven't to your point, right? We haven't seen 3-month lows expanding or 6-month lows. Certainly not new 52-week lows, right? Doesn't this get back to your Hurley, like fall day? Like it's not even in the realm of the conversation at this point, right?
It's not even close. And I think that I'm not going to say chart crime, but I'm not happy about this because you got to zoom out. You're not giving enough context. You're making the 10-day lows look higher than they are. This is not a reading you even blink at when we cycle through our charts.
That's just the point that's literally the point I'm making.
I know, but it looks high. It looks high because we're so zoomed in here.
Okay, I guess. But the point is, look at the 3-month lows, which I think is a bigger deal here.
Yeah.
There's nothing.
Nothing. No.
That's what I'm saying.
That's the takeaway.
Contrary to popular belief, Strazza, we are agreeing here, buddy.
Fine. Put up the nicey composite net new highs, new lows. Like this just shows
this net new highs and new lows. Can we stop with that?
This is a Willyism. Like
I love Willy. I love Willy, but this is shit.
You need what? More stocks need to be making new highs than new lows for a bull market. And on the flip side of that, more stocks need to be making new lows than new highs for a bear market. In the summer to fall sell-off of last year, look at the net new lows. We actually had a real number that was worth, maybe worrying about, giving some degree of caution, right? Not today. Like all the selling that we've had these past 2 weeks, this is your net new highs. We flipped negative for a couple days, and we're going to be positive today.
Dude, this is nothing. This is irrelevant. How many stocks are on the New York Stock Exchange, Strazza?
No, but this is good. This is important context, right? Like, yes, despite the selling pressure of last week, from an internal standpoint, this is just, hey, you know what it is, JC? It's garden variety. It's a little garden variety.
I have to say the word garden variety.
Garden variety.
There's over 4,000 stocks on the New York Stock Exchange. So this 400 nonsense of net new highs is stupid. This is, you see, everybody here in the chat, we are now dumber because of this chart.
Why?
Everyone here in the room is now dumber.
Why? How many stocks?
I don't understand why new 52-week lows is relevant at all in this conversation if we're nowhere near new 52-week lows in anything. What does it matter?
No, they'll show up. We weren't near new 52-week lows.
They'll show up when it's too late. This is dumb. This is dumb.
Look at the reading from last fall and compare it to today, is all I'm saying.
Great, but the reading last fall was irrelevant too.
I guess.
This is dumb.
I don't agree, and Mike Hurley would disagree with you.
Great. I love Mike Hurley. I love Willie also. This is dumb.
I'm not going to reinvent the wheel here.
It's dumb. I love all the people you just mentioned.
All right. Should we bring on Mr. Hirsch?
They're not dumb. This chart is dumb. They're not dumb at all. They're way smarter than I am, for the record.
Bring Jeff on.
Please.
All right.
Speaking of smarter than
Jeff
I am.
Hirsch, Stock Traders Almanac. He's here.
Do a saltwater gargle.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jeffrey.
Morning, gentlemen.
What's up, my man?
Had a little road trip this weekend. A little road weary from yesterday. Drove back from down by Dulles, Virginia.
Well, what the hell are you doing in Virginia?
It's a high school rugby tournament.
Oh, cool.
They still let you play?
Yeah.
No, I was just cheering, just rooting the boys on, and the ladies team, the girls team from my son's club.
Were you giving them some pointers? Was the old man coming in being like, "This is how it's done, kids"?
There was one I wanted to tell him about, and I was keeping my mouth shut, trying to be a cool dad, and I should have told him because I was right. They were spoiling on the line out. So,
spoiling on the line out.
Yeah, because I used to throw in.
You were like the quarterback?
No, I was more like the center.
So the center's allowed to throw the ball in rugby.
Well, in rugby, the center in the scrum is the guy who throws the ball in on the line out, and the quarterback's the guy who sits on the behind the line out and pitches it out to the guys.
Got it. So you weren't like the skinny fast guy on the outside.
Skinny fast, never two words used to describe me whatsoever.
Fair enough. Fair enough.
Even with the recent fitness and losing weight, still not.
Before we
skinny.
get into the markets, any words of wisdom? So Jeff Hirsch looking great these days. Saw you the other day on stage with three heavy set gentlemen, and you were looking great, man.
Well, I subscribe to the Perlman program for the most part, but you got to get out there and move every day, and you got to skip some meals, man. And
sounding like Perlman these days too.
And basically, it's a lot of protein, a lot of get rid of the bread and all that stuff, and just get some good rest, man. You guys know.
Oh yeah.
Oh, we know. You just follow it better than we do.
It's not complicated.
Nobody said it was.
Nope.
You don't have to work out so much, man.
I know, but that Super Tuscan last night was whew. It was nice. All right, Hirsch.
Yeah.
So for those of you who don't know Jeff Hirsch, if you don't know who Jeff Hirsch is, your life has gone horribly wrong. We're looking at the editor of the Stock Traders Almanac. If you don't have the Stock Traders Almanac sitting on your desk, I don't know what to tell you. I can't take you seriously. I can't.
I have it here somewhere. I swear.
I remember getting that almanac. I remember like in the 2000s, like receiving the almanac and like reading it cover to cover, like every year. This is before Jeff and I were friends. We didn't even know each other at the time.
Yeah.
So, I'm not like pumping you here. Like that's just the truth.
Now I ship it to you myself personally because I gotta write you a note on there.
I like it. We've come so far. I'm coming up in the world, Hirsch. So talk to me. So, assume I know nothing about seasonality. I don't know anything. I'm new to the markets. I think seasonality is voodoo. Why should I care? Tell the folks why they should care.
I mean, simply, people are habitual creatures. Your show comes on the same time every day now, right? You don't just randomly do it on Sunday at 3 p.m., right? I mean, it's, the mornings during the week. So we all have habits and we follow them. People who participate in the market, institutions, individuals, groups of people, all have repetitive habitual behavior. It's like the core of behavioral finance. And that's what creates these seasonal patterns. And it's not so much the sun, moon, and stars, but what people do with their money on a regular basis, whether it be intraday, daily, weekly, monthly, seasonally, the summer period, the Salome period, the worst 6 months is driven by the fact that people do other things and they get away from the market and they park cash. I mean, God willing, Steve, me and you will play some golf this summer. I know you and I had some fun last year, but we didn't get Strazza up there, and that's typical of what happens in those months. So that's what creates the seasonality. I was interested in what you guys were talking about when I logged on here, when I was sitting in the green room there with the new lows, because I think it's an important discussion. I look at it. I'm looking over at my pulse of the market on my last monthly outlook from a few weeks ago, and the lows were a little bit bigger. We look at the weekly ones, the old Barron's type stats.
Explain to the kids what Barron's is.
What is that? It sounds like Gollum. What is Barron's is?
What is that? Tell the kids what it is.
It
Explain
was
what a
a
newspaper
actual
is, first of all.
paper, a newspaper, weekly that I learned about the market in growing up in the business. My father had a stack of the Barron's lab pages. I'm 5, whatever, 6, 7.5, maybe 8. We'll see. But it was like 5 feet tall and that's how he built the Almanac. Was the Barron's lab pages, the stats was the daily Dow, half hourly ticks. I still have the little ruler back at the other office where I used to run down and underline up half hour ticks.
Yeah.
And, he had the stack of them back to 66 when he started the book. So that was our data source. Instead of going to Yahoo or CNBC or Stock Chart or wherever you get your stats, your data, we entered them on graph paper from Barron's.
So shout out Barron's and Wall Street Journal too, because a lot of what we do, our breath work today, started with the Barron's Market Lab and all of these stats that they were putting out on a weekly basis throughout the years. You can still get it. A lot of people don't know this. I don't think you can get Barron's delivered physical anymore. Maybe you can. I can't.
I don't know. Steve, I don't want to say unkind things about, but
right.
they've wrecked it. They got where they had to put things out, on a certain night, and like the put call ratios that we used to get out of there. They stopped doing it on Friday. It was a weekly put call ratio. It mattered to get the whole week in there. And because they had to go to what's that?
They stopped doing that?
Well, they stopped doing it right because they were taking Thursdays because they had to get the press. It's like how do you get less current data in this modern digital age? I don't know.
Yeah,
so we don't really use it as much as we used to, but it was where I learned about them. And there was also the 13 D filings and all the all the stats.
The insider sales ratio I used to love. They had a lot of cool stuff.
And the sentiment numbers.
Yep.
I mean, I'm looking at my pulse of the market, which comes right out of the back of the Almanac. I don't know if you have yours handy, but
it's downstairs.
I'll forgive you. But the weekly indicator record is what I mean. You don't necessarily fill it out in the book anymore, but it's a model for how to track data.
Yep.
And that's getting back to the new lows question. Those were, you could put whatever you want up across. That was always it here. Use these forms to track your market stats. But we have, and interestingly, there's a down Friday, down Monday pattern that we've had a few of this year. We could potentially have one today. We were down Friday, correct? And this is based on the Dow. Market looks green this morning, but recently we've seen a lot of green mornings and red afternoons. So the day is young, as we say.
Bears have really taken control of the tape in recent weeks, like you said.
Yeah, Bears, but I know you're looking at some levels, and that 5,000 level on the S&P just kind of is a big round number and a big support line across the top. It's not that everybody on the planet doesn't know it, but I'll bring it to the election cycle because that's what's looking at me. I don't know if you've seen my recent charts of the cycle. I didn't.
Did you send us charts today? We'll put them up.
Did I send it to you right now? Let me see if I posted that up there. It's using the top. I think I did it. Yeah, here it is. It's on. I'm going to forward it to you. How do you want me to share it? Just Can I tweet it to you again?
You can put it on Twitter. Fonz can get it
Oh,
from
I know.
Twitter.
I'll
Spencer,
copy the
where do you want
link.
to start?
I'll put
Yeah.
it in the chat. I'll
If
copy
you
the
tweet
link
it
to
or just email it to us, either way.
Here, I put it in the chat.
Yeah, there you go.
Private
Oh,
chat.
there we go. That's good. Thank you.
Yeah, look at me. Look at boom. The boomer's thinking.
All right. So what do you want? Is this market internals? What are you going to talk to us about?
This is the 4-year cycle. This is the election cycle. Election year seasonal pattern. There it is.
Great.
Okay. The red line, the green line is the years since 1950, election years that had these blowout Q1s like we had this year.
Got it.
I'm not going to rattle off the years. It's about 7 of them.
Got it.
Not a huge statistical number. It's 76, 72. I think I commented on the feed about. I think I listed them off the top of my head.
So it's not uncommon to see some of the election year.
It's not uncommon.
Pulled forward into Q1 is what you found when you look under the surface. Big Q1s, not.
When you look at 24 tracking this pattern, which it is, here's this April-May correction that we're in. Our buddy Ryan Dietrich commented on some of this stuff too, that we get this sideways pattern in the election years through like Memorial Day. I mean, and going back to JC's opening question about what makes seasonality happen, what's Memorial Day? It's the beginning of the summer. It's the beginning of when people in the States and even the rest of the world in the Northern Hemisphere where we all live start to do different things over the summer months. So when you have these big Q1s, you see this soft patch. I mean, there was an old May-June disaster area that my father used to talk about. That doesn't work as much anymore. One of those indicator graveyard or seasonality graveyard type things.
This looks more like April, May.
Say again?
This looks more like April, May.
Well, that's in this instance. I mean, April being the best month of the year for the Dow and S&P, and good for everything else. When you see a correction like this, as we've talked about many times, I mean, something else is going on when seasonality isn't necessarily working. But switching over to this particular election year cycle pattern, this type of pullback, not unrealistic from the type of level we were at, regardless of what time of year it is or where it is, but setting up at the end of the best 6 months. And I just got to put out there, we had our, best 6 months sell sig go on April 2nd. April is the last of the best 6 months, November to April. And we start looking for a MACD crossover, which, you guys could put that up using the 1226 on the sell side.
Yeah.
Right at the start of the month. S&P had triggered the first trading day. Dow came the next day. So we make sure we get confirm on both of them. There's, happy Passover, Zis Pesach there to my my lanceman out there. But there's a pattern, the old sell Rosh Hashanah, buy Yom Kippur, sell Passover. However, Easter was early this year. It looks like Easter was the better sell at this point for that seasonal trade. Again, talk about some of those little sayings and those holidays. It really just highlights the habitual behavior, the repetitive cultural activity of human beings and what they do with their money collectively. So
Jeff.
So
yes.
I got 2 questions. Hold on, Spencer.
Go ahead.
The MACD that you're using is the daily 1226.
Correct.
What do you do when it's this noisy? It's been awfully noisy this year.
Oh my God, I wrote about that. It was bouncing around positive. See, the thing with MACD that we learned from the guy who invented it, Jerry Appel, the late great, is that it's really a secondary indicator to confirm another reason to buy or sell something. Whether it's I like Adidas sneakers, I'm wearing my Adidas shirt today. I buy the stock, or I like Tesla cars, I buy Tesla, or it's the beginning of the best 6 months. Let's look for a crossover in October, ahead of the best 6 months. So, or if you have another technical reason, you would use the MACD as a trigger. Let's say you're using an AV WAP level or something, and then you get a crossover, or you're looking at a Bollinger Band. Maybe I'm just making it up just to give you an example, but MACD is a technical, works better for me when combined with a seasonality, which I know JC would argue is technical analysis as well. But and also when we're looking at, at a fundamental reason to buy a stock, we do some fundamental screens. I know you guys are pure technical, but we look for stocks that are throwing off some pretty aggressive growth acceleration numbers in revenues and earnings. And when we see a crossover, it's a confirmation to get in.
Yep.
So that's MACD. And on the buy side, we 817.9 because it's faster.
You speed it up. That's interesting.
Because bottoms, here's the big, are an event. Tops are a process. You got to use the proper hand signals for these things,
Big round.
Process, event.
Jeff,
Offsides, JC, here he is.
No, I wanted to chime in here a little bit. So obviously, seasonality is technical analysis, certainly not fundamental analysis, right? So just to be clear, technical analysis is the study. I love how I'm schooling the seasonality guy, respectfully, Hirsch. So technical analysis is the study of the behavior of the market and market participants, for that matter. Seasonality is exactly that. We're studying the historical behavior of the market and the behavior of market participants. This is 100% technical analysis. And Hirsch has come around to this, by the way, over the years. So, right?
When did we have this talk? We had this discussion a decade ago. Yeah.
Yeah. And it's totally technical.
That's why I started to like you a lot.
Haha. Well, one day I'll like you too, Jeff.
I know.
So,
but go ahead.
It's that golf swing that gets me,
Oh yeah.
So why don't you talk to me about January, the trifecta, the barometer, all that stuff. Like, how do we think about that here now on 420, right? So you're sitting here on 420, you do whatever you do on 420, you're thinking back to what we've seen so far this year. Like, as investors, how should we think about that? Should it matter?
It matters. It was important, but the trifecta wasn't 100% this year. We did get the January barometer to come in, which is the most important. But it gives us an overarching positive outlook on the year. It helps confirm the election year stuff, the sitting president running pattern. But here we are. I don't know. Did you see this chart we put up here? I mean, I think the Q1 performance is even stronger. I mean, you have on top of the previous 2 months, you've got these first 3 months of the year. So the January trifecta is and this year we didn't hit the trifecta. It was just the barometer. It's just sort of there underscoring the general bullish nature of this particular year. I know it's not as bullish as last year. We know our 4-year cycle, stats that the third year is the strongest year of all of them. So the fact that we've had that, come to pass just lends more support to this year following the continuing seasonal and 4-year cycle pattern. So January's there, but the part that I want to get to next here, you see this green line that I've drawn here that we're looking at? This is the last 7 months of election years. If you, I know Steve's Almanac,
but specifically good ones that are good Q1 election years.
Right, but if you just look at the black line, you can see the same sort of trend.
Yeah,
with a little bit more of a dip in October. Sure. But the last 7 months of election years have only been down 2 times since 1950. 2000 when we had the undecided election, and 2008 during the GFC. So you're looking at this period where you're getting through some of that uncertainty. I know we talked about uncertainty in the election year the other day, guys, but when you get normally to the convention period in the summer, you start to at least know who the 2 candidates are, and the market likes to, limit uncertainty. We already know now, but there's still potentially uncertainty out there. But generally, when things go as expected and we get a decision on election day, the last 7 months are strong. You can see this 2-month correction after the big Q1s falls into that pattern. So while bears are taking over the momentum a little bit the last couple of weeks, and people are concerned, I think we're looking at a little bit of a respite, which was one of my headlines earlier this month, the rally respite during the worst months or the end of the best 6 months. So it's playing along. And I mean, technically, I would defer to you guys about what you're seeing. Getting back to that new lows situation, which is, I guess, had expanded and is now retreating a little bit from the chart that I saw when I jumped on. Is that what you guys were sort of the point you were making? And somebody's got a question about sentiment. There's a chart we look at with sentiment where sentiment can stay really bullish for a long time as the market rips higher like it did in 21. Again, that's the tops making being a process. So bullish sentiment is not as indicative as bearish sentiment when it gets to an extreme, from my experience.
Yeah, I would agree with that.
Yeah. So, people want to know what to do. I know there's a little more active, trading vibe here and in general in the world, but sometimes it's okay to wait. Cash gives you time to think. You can wait for a fatter pitch. I'm not a big short guy. I'm not a big, short-term trader. I'm a swing, and seasonal person. I think this is a time to just be a little patient. Work on the swing, go to the range,
right?
Go plant some flowers with your family, get out in the yard a little bit.
Sure.
Play with the
Things
kids.
I like.
Go to Jazz Fest with your son and visit a college.
So based on
Good way
this
to do it.
trend, though, Jeff, it seems like we can be patient here, looking to re-enter on this dip. It seems as though 2 weeks of selling off. If you look at the seasonal trend, it's more like 6 to 8 weeks of selling off at this point in the year.
I mean, it's a little steeper on the chart I showed, so it might be shorter. It depends. I mean, the averages aren't necessarily what happens this year, but I think you can look for an entry point. Maybe use MACD again. I mean, I'm not jumping in. This is a period of time between the end of the best 6 months for Dow and S&P and the end of the best 8 months for NASDAQ, which is June, where we start to shift cautious, and we're going to be patient. There's some, decent interest rates that you can earn while you sit with some cash and you analyze, your next moves.
You go buy commodities.
You could do that.
You want to talk a little bit about that seasonality cycle for commodities? How should we think about that?
They're different depending upon the commodity. I mean, copper is something that is in the news recently. Seasonally, we trade that. I own the COPX, the miners, which is, normally a December to May type of seasonal rally. It probably gets a little more legs with what's going on in the world right now. But, that's when you have the construction lull during the cold months. And, oil's in a seasonal trade. Again, similar. Oil and gas tend to make a low around December, February, and then run into the beginning of the summer with the driving and air conditioning season. Whereas you look at some of the other commodities and they have a different cycle based upon, when they're, either the growth of the livestock or the planting season. There's all sorts of different things. And it's just, it's not one seasonality for commodities, especially if you're looking at metals versus, grains or whatever. So there's a lot there. Same thing with the sectors.
Right. The seasonal trends, though, between commodity contracts can vary in a big way, far more than different sectors in the stock market per se.
Yeah, especially with the makeup of the contracts and the rollovers and the contango and all that stuff. So when we do the Commodity Traders Almanac, which we're working on for the upcoming year, which has been on hiatus for about 10, we look at a contract out in the future that is near where or after the seasonality ends.
Okay.
That's the trick. And you got to run through. I mean, you look at the what's the one, the continuously linked contract for finding the seasonal move, but then you got to roll into the different monthly contracts to see where it's actually tradable. And that's kind of why, for me, when it comes to trading commodities, I'm an ETF guy or a highly correlated stock guy. There's some things that don't exist anymore. There was a real great copper trade, Global Brass and Copper Holdings, that got taken private, which was a great proxy for copper. You could do Freeport. But
There used to be an ETF, JJC.
Yep.
Yeah.
I think it's
like somebody calling my name with a stutter.
They still have it.
No, it's gone, bro.
No.
It's gone.
That was a copper?
JJC.
Yeah, there's also an ETF at Sprott, I think, puts out a bunch of different new commodity ETFs.
Of course they do.
Yeah. They have, and then, go ahead.
I was going to say one more thing before we let you run. I wanted to hear your thoughts on sort of next year, right? I know this is a long time away, but how do you think about that? So first couple of years of a 4-year presidential cycle are usually the worst two. The back half, usually the better two. How should we think about that going into the worst 2 years of the 4-year cycle?
I mean, I'm thinking about it already. I mean, we're going to be, wrapping up within a couple of months.
You're the one that writes the book. You better be thinking about it.
That's right. I mean, listen, man, when it comes time to put the Almanac to bed, I will go snake-eyed and I will write what I think is going to happen next year. But I'm already concerned. Bear market start in those years. We've come a long way. We're going to have some sort of second-term president, one of them, and we'll see what happens. We've got a bunch of things going on the planet. So I am concerned for next year. We could easily have a bear market and that recession that, people have been talking about for a while. We're due. But let's see how things pan out. I mean, I will have to make a call on that within the next couple of months, and we will rely on the patterns and the cycles, and we'll see where we're at the time. But early handicapping is, I think it's going to be a year for caution, and probably, maybe more of a commodity year than a stock year.
Jeff, talk to us about utilities quickly before we let you go. There's a question in the chat.
Yeah, I see the question. XLU, full disclosure, I own it. Utility seasonal bullish period from May through October. We're in it. It's been chopping along, sort of marking time. Probably a decent entry period. We've got a buy limit in the newsletter.
So
I guess I can look it up. Okay.
This is important. If we just take a step back, it's a bull market. We're in a primary uptrend for stocks. During corrective periods, you mentioned that you don't like to short, right? That's a little bit cute. But one way you can kind of shield yourself a bit from these corrective waves within the context of a bull market is to just move into more defensive assets.
Correct.
And that's really what you're doing long utilities.
That's what I'm doing. I also moved into bonds, short-term bonds, the ETFs. Also, a worst 6-month seasonal period. SHV, SGOV are the easy ones to get into. Not really leaning on the longer-term ones. No one really knows what's going to happen to the Fed, but it's looking like they're not going to lower rates anytime majorly soon. So
I can't wait for them to raise rates in everybody's face.
This is like a couple months duration, the bond funds that you just threw out, right?
Even shorter. One's 0 to 3. Yeah. And they're both around 5% or so. So that's an easy way to just, instead of a money market, whatever, just to earn something while you're sitting there thinking.
Same thing.
Here you go.
What you got?
All right, man.
Jeff Hirsch, you are the man, my friend. Always a pleasure. How'd you wind up on those Masters bets that you put on? You lose all your money, or did you get any of them right?
I did not place in my pool for the Masters. We still have.
I'm sitting at the bar with these two knuckleheads talking about their Masters bet. How'd you do, Strazza? You lose everything, or did you make any money?
No, I lost most things, but I won on that Tiger Woods prop bet. He had a birdie on the first hole.
In the second round?
No, he had a birdie in the first round. We were busy preparing for the presentation. I don't know why I thought he had par. He had a birdie. First round, first hole, yeah.
All right, congratulations.
That's a good bet.
The two of them, they got one out of all their bets right, so that's great. Tax on the stupid.
Hey, JC, you know what bets I haven't been winning lately? Miami Heat. What's going on there?
Jimmy Butler's out.
Hey,
bro.
all right.
I don't know what you want from me. All right, Jeff.
Thanks, Jeff.
Good one, bro.
Good day, gents. Thanks for having me.
Dude, Hirsch lives like 2 blocks from Perlman. Like I'm exaggerating, but he's like 10 minutes from Perlman.
They're close enough that they can hang out. Yeah.
I know. That's like cheating, though. Of course he's doing well.
I know. You think Phil like checks on him, peeks through his windows?
They go hiking together. They like hold hands.
Maybe.
They talk about like protein and like
Right.
animals.
Perlman was asking me what I ate this weekend, and I was like, well, I had a croquette, had a
Oh.
beignet, and he's just going, oh.
Yo, can we do this? Hot corner? Because dude, they're dropping 27 milli on this small cap trucker.
You like it? Yeah.
We can do that.
You can have that.
Yeah, can we please?
Do we have that chart?
Hot corner. So hot right now.
I don't know what trucker you're talking about.
RXO. What do you mean?
I'm seeing
RXO.
that's a trucker.
Yeah, it's a trucker. Why did
No.
you say software? Maybe it's a trucking software?
I'm seeing industrials in one of my accounts. Let's see.
Wait a minute.
No, man. This is a trucking company, dude.
All right, maybe.
Freight forwarding.
Well, that's the thing.
Why
That's
does
the
it
thing
say
about software. Because it could be software, right? Haven't we gone over
It could
this?
be
Isn't everything a software
software.
stock?
It could be trucking
Yeah.
software. I don't know the answer.
That
Says it offers
engineering
broker-
software stock. How cool is that one? All right.
Brokered services and managed transportation, last mile and freight forwarding. Doesn't sound like software to me.
No.
No, it is a software
That's
company
like-
for. It is a trucking software company.
There it is.
Yeah.
There it is.
So that's-
Spencer Israel. That's why
everybody
we keep you around,
wins.
buddy. Oh look,
Everybody wins.
Robert says it was spun off from XPO. There you go.
Yeah.
Yep.
So logistics.
So who's this guy? Nanji Farhad. Who's this guy?
I don't know. Again, we don't overthink who these guys are, how much money we want to guess that they might have, right? That's not a winning strategy in this. So we don't know who Farhad is. The sheer size of the purchase does make it stand out. And then when we look to the chart, we are certain that we're not interested.
You know the funniest part? When you Google this Nanji Farhad, our hot corner comes out.
Yeah, listen, we don't Google these guys unless
funny.
there's something very strange. So the Marriott Vacations Worldwide, though, did stand out to me. New position. So this would be the original filing, an active stake, and Impact of Capital has just been very active the past few years. And they've been one of the better institutions that we've been paying close attention to. So VAC looks like it's trying to print some sort of a trend reversal here. Needs more time, if you ask me, but this one we're definitely going to keep on our radar. Marriott's other stock. So VAC is like the timeshare, like vacation sort of division that they spun off. MAR is still Marriott, like the hotels, the Marriott that we all know and would think of when we hear Marriott stock. That chart looks incredible. 70 billion market cap for Marriott. Powerhouse stock. VAC is built a little bit different, right? It's a different business.
Yeah, both charts suck.
MAR sucks.
VAR?
MAR.
Zoom out, man. What?
MAR? Yeah, zoom out.
Oh, no. MAR, no.
Yeah, so I'm just saying the
VAC.
Marriott, like original Marriott stock looks very good. as
Like
opposed to
crazy
Marriott
good.
Vacations.
Like crazy good. Like new all-time highs last month.
Excellent.
Yeah. Short term, not so much, but bigger picture, wow, what a beast, Marriott.
Yeah. And they pay sweet spot dividend yield too, just under 1%. Love to see that payout ratio below 20%.
It's all the hotel stocks, really. It's not just Marriott. It's Hyatt, it's Hilton.
You're absolutely right.
Those are the big three.
I was going to say, what could they possibly be doing so well on in a Marriott? But they own, listen to this, they own, Marriott owns Ritz-Carlton.
Yeah.
They own the St. Regis.
Yeah.
They
Marriott's great.
own,
They all own these hotel companies are like car companies. There's like 15 sub brands.
yeah, they own Westin and Sheraton and those two, but I'm more interested in the Ritz and the St. Regis. That's more my steez.
W.
Oh, they own the W also.
W. Yeah.
All right, Marriott, I see you, dog. I see you.
All of them, though, great. Hyatt and Hilton, too. Spencer, H and HLT. Charts look exactly the same. So all three of these large, dominant hotel operators have been secular leaders, really. Really.
And when you compare them to other consumer discretionary stocks, I mean, this is on another level.
Yep.
Right?
Absolutely.
All right. Want to do a quick little rundown? And I got a chart for you guys. Quick little rundown,
love it.
Spencer?
Love it. Give me a chart.
All right, quick little rundown, and then Spencer's going to tell me all the things that I need to know for the trading day today. But very quickly, we're looking at Dow futures have pretty much lost all their gains for the morning, down only 70 points now. Excuse me, up only 70 points now. That's 20 basis points. S&P futures have lost half their gains as well, hovering right above that 5,000 level. NASDAQ 100 futures actually up 100 points, up a little slightly higher than it was an hour ago. Bond futures still down again, getting the crap kicked out of them as usual. Gold futures down 2.5%. Silver futures down 5%. Correction in precious metals for sure. Crude oil down 1.5%, all the way down to $81. Is the dollar inching higher a little bit this morning, Spencer? What do you think about that?
The growth trade is just, there's been glaring weakness there. So far more important than something like industrials or financials to me this week is stuff like ARC or the IPO index or small cap growth or just small caps, IWM, biotechs. Those indexes need to stop falling, right? The more speculative tech stuff, more speculative growth stuff, there's literally a failed breakout in every growth index, regardless of the cap size across the board right now. That damage needs to be repaired.
Yeah, it's going to take some time. All right, Spencer, what do we need to know? Anything exciting happening? I saw some news that I want to share.
Oh, you did? Okay. I mean, the news that I have to share isn't especially exciting, right? We had like Verizon earnings this morning and the numbers were okay. I mean, the top line was a slight miss, but the bottom line was a slight beat. They gave inline guidance and the stock is up like 1% today. So whoop-de-doo.
I got.
What?
How about the C Limited upgrade? Stock's up 10%.
Yeah, I didn't get there yet. So C Limited is up 9% now.
Yeah,
that was an upgrade from Bank of America, right? Not a ton of coverage on these these kinds of stocks. So 9% though is 9% would be a big move for any stock on any upgrade.
The street gets really excited about this name. There's a huge TAM, right? This is a big TAM story.
Oh, I love me some TAM.
Yeah, big TAM story here.
It's
all right.
TAM.
We also had
TAM.
yeah.
They'll all jump onto a name like this as the trend progresses and you get some sort of primary trend reversal. Watch the street just love this name. The Amazon of notes that are coming, I can't wait. They're going to come pouring in as the trend improves here.
The Amazon of
stories. Because the
I
analysts,
thought we were done with that.
They have that story written out.
We're never going to be done with that, bro.
They just changed the name, right, on the Amazon of story, and they pump out these wildly bullish notes about it.
How funny is it that the other months ago, Sean put on an options trade on C Limited. He swore up and down it was a shipping stock.
Yeah, he did. Yep, he did.
So good, so good.
All right.
Well, a few months ago, we bought a utility stock, and I thought it was a bank. Remember?
Which one?
I forgot. I swear I thought it was a bank when we bought it. And as it turns out, and you guys kept saying, like, what is this guy talking about? It wasn't a bank at all. It was a utility stock all along. I forgot the name of it. Throw up slide 3. A lot of people are not going to want to hear this, but I'll give myself credit on this one. I was right. To think otherwise, I think is foolish. New York Stock Exchange already talking about that 24/7 trading. About time.
Dude, we've been talking about this, JC, you and I, for what was it? Steve Cohen bought that firm. It was 3 or 4 years ago now. It was like at pandemic moment. But there's some big money behind this. Hedge funds are backing this. It's not just Cohen.
It's inevitable. I mean, listen, for the record, I don't want it. And I know most people don't want it. But to think this not coming, I think is silly. So what do you got? Cryptocurrencies are trading 168 hours a week.
This is about Cohen. Yeah, sorry. Just saw the headline. Yeah.
So this is 168 hours a week cryptocurrencies trade. On average, the US stock market's only open about 31 hours a week. 31 and a half-ish.
That's enough.
Big difference. 24/7 trading. I don't like this personally.
No, it'll be fine.
Just to be clear, but I've been saying all along it's coming, right? I don't get it. I don't get a vote here. So
I think they have to do it. It's a hedge, right? It's a hedge. If you're Ken Griffin at Citadel, It's a huge hedge, right?
I don't know, man.
What do you mean you don't know?
They already do this for like a select number of securities for on TD Ameritrade.
Robinhood and Ameritrade. Yeah.
Right. And Citadel is like the main counterparty there. And they're the market maker.
Right.
And I'm sure it's a huge windfall for them because there's no they make the liquidity at 1 a.m. in SPY, right?
You're making my point. That's their market right now as it exists. Right. So they need to invest in this new thing as a hedge for losing that business. No?
What about like less liquid securities? I guess it's no different in crypto. Crypto's trading 24/7, less liquid securities. So, we've already seen it.
I think we had a hot take on this 3 or 4 years ago when this news first came out, and it hasn't changed. There will be a market for certain people of certain size. It will be available. It's not going to move the needle, and people aren't going to pay too much attention to it. And Wall Street's not going to start working different hours because of it, right?
I agree.
So when these guys are at their desks, whenever that is, whenever they decide that will be, and I think that will remain 9:30 to 4, that's your market hours. Can you access the market during other times? It's 2024. I think we should be there, right? So this shouldn't be a shock. I don't think it's going to be material. You're not going to miss anything if you're not watching.
You know what it would do is it would change the earnings moves, right? Because
an NVIDIA earnings report, that market will be super liquid that night, right? In the coming morning. And it'll probably be great for stuff like that. But on balance, it's going to be a snooze fest, I would think.
For the foreseeable future. Maybe one day that changes.
Maybe robots can do it.
Dude, I love robots. I'm bullish for robots.
Couple more things, and then we'll bring Ian on. Informatica, INFA. This was rumored to be a takeover target from Salesforce. Now
they're worried about antitrust, right?
I guess I don't know. Talks have fizzled between Salesforce and that's what they said. So INFA down this morning on that headline. Tesla and Lee, I think we have both those charts. Both down this morning. Last I checked, both involved in a bit of a price war with each other, both lowering prices on their main vehicles in China. So that's just another day, another negative headline for Tesla.
Spencer, do you know what the proposed deal price was on this INFA? Any idea?
Why do I want to say it was like a cash and stock deal? I don't know if there ever was a price. Hold on, let me see. I don't know if I remember. I definitely don't remember. Let me see. What do we have here?
Sorry,
I'm not seeing a price.
It's an interesting chart. This INFA.
Yeah, I don't see it.
And this is big data, right? It's like machine learning. All that. What's the sexy phrase?
Yeah, I don't think there was a price ever disclosed. Anyway, might not happen now. So
yeah,
all right, that's what I got.
It's been rumored that this was going to fall through. Been hearing about this.
Oh, all right. Yeah, I mean,
the all-in guys have been
generally speaking, general rule of thumb: if there's a report of M&A, like of an impending deal or rumors of a deal, and they don't materialize, and the deal itself does not come through within like a month, then it's over, right?
Or if the discount is too large, right, then that's the market basically saying you're not getting a deal here, which why I asked about what the takeout price would have been. Because a lot of times you'll see that, right? Where maybe the deal would have been valued at $50, but the stock's only trading at 40. That's the market telling you that's too big of a discount, right? There's something.
Take your cues from the M&A arbitrators, right? Because if they're going to price at a big discount, like the Activision Microsoft thing had a big discount for a long time, and that ended up going through. It took 2.5 years, right, or whatever, right? But
yeah, you can. When a merger has a really high odds of going through, you'll see as soon as it's announced, the market price is going to ping right up to that deal price, and it's going to be it's going to just
and it'll stay there. It'll just be stuck. Okay, let's bring on Ian Cully. Let's talk some gold. Where's Ian's bumper? Gotta get that first.
I love gold.
There we go.
I love gold. Ian Colley in the house.
Good morning, guys. How we doing?
What's up, my man?
All right.
I want to talk about some Fibonacci extensions.
Yes.
You take the base from 2020 until this year's breakout, and it takes you what, just under 2,400?
Yep, right around 2,400, 2,400 and a half.
Hey, there you go. I was looking at my own chart. I appreciate this. All right, I see you. Got it. So you're taking this all the way back to 2011.
Yes.
And you think it's a coincidence that gold stopped going up as soon as it hit that level?
No.
You do not.
Not at all. We see it time and again. I mean, price doesn't always respect these levels, but gold obviously is right now. And it makes sense to see some consolidation, some sideways chop. I mean, that's what we're seeing right now. I mean, wicked stick and silver today. Down, 5 1/4?
Yeah.
Over 5%. So, I mean, I don't think it's a big deal. Bigger picture. It makes a lot of sense, especially after the recent moves. But yeah, we got some overhead supply and logical levels of resistance coming in.
I want to point everybody to the Fibonacci. Spencer, if you could drop that in. I just dropped it in the private chat there. Guys, if you're interested in how to calculate these lines, I highly encourage you to read this little primer on how we calculate. You know what we should do? We should probably do like a video about it. Strazza and I just did a presentation the other day, and I guess, where did I give a presentation recently where it was the first time in a while? I forgot. So this was the second time in the last few months that I've explained the math behind Fibonacci, and I got to tell you, I still got it. I still got it. I don't know where the first time was. Where the hell was I? I gave a presentation somewhere, and this was the second time I explained the math behind the rabbits mating in caves to be able to calculate these. And I thought I did a pretty good job. And a lot of people were like, wow, that was the best explanation, right? How did I do, Strazza?
Well, when we do these presentations together, for the most part, 95% of the deck, we could, pass it to each other. It doesn't matter. But before we went up for this one in Miami the other day, I'm like, just don't pass me the rabbit math, because I can't, I can't take that. I can't do that right now. JC came up, absolutely nailed the rabbit math. And they
did a pretty good job, right? That was pretty good.
Yeah, everybody was loving it. They were talking about how it shows up in nature, and people were like, oh yeah, like a sunflower.
Yeah, because I mean, if you're in that room, and there were people who paid to be there and listen to us, if you can imagine that, they're all math nerds at the end of the day, so they were into it, So if you guys are curious as to why gold literally stopped going up as soon as it hit this Fibonacci extension level, it's not a coincidence. Spencer just dropped it in the chat. Put it in the show notes, Spencer, so people can see that. I think it's really valuable. There's a reason why all these damn lines are always on our charts. We're not wasting our own time here.
Well, do you remember when I told you I was going to Ross stores last week? And you're like, why the hell would you do that? So I'm, navigating the very, very sloppy, messy aisles in Ross, and I stumble upon one of those seashells with the golden ratio. You know exactly what I'm talking about, right?
Indeed.
Yeah, it's like $25. So I have golden ratio art. Now I just need to find a place for it. Yeah, something like that.
Nice.
Great. Fibonacci's talking to me at Ross.
You know who gave me this book?
No? That's a book?
Yeah, it's a book.
Let me guess. Bart?
Nope. Brian Shannon.
Brian, really?
He sent me this book, I think, when my kids were born, as like a present. Great book.
I'm going to get that.
Yeah. The Golden Ratio, The Divine Beauty of Mathematics by Gary B. Meisner.
Because you could find books that go deep, really deep on this, with musical notes and how it shows up here and there, and ancient math and ancient geography and all, or sacred geometry, whatever the hell they call it. And all that shit's over my head. I just want to see like pictures of it on sunflowers and like the pyramids and stuff. Like that's kind of like where
and like the Mona Lisa with the beautiful face. Like that's what I'm into. I'm into that stuff too. I'm into that stuff too. All right. Ian Colley. So go back, throw that gold chart up there, because it looks like a monster breakout. Looks like that first extension has been hit, and I think that's the key word here. The first extension has now been hit. My suspicion is there will be a second, potentially even a third extension hit there. The bigger the base, the higher in space. How long is it going to take now for a consolidation to play itself out and we start to get the next leg higher? How are you thinking about this?
It's not going to take.
What? Say that again.
I don't know. I imagine we're above 2,500 by the end of the year. I don't think we're gonna get a similar consolidation like we got, starting in 2020.
But there's 7.5 months between now and then.
I was going to say, what is that?
Yeah.
How's that help us?
Well, Ian got really bowled up, right, on the breakout. And then I think the message since last week was, okay, we're here. We're at stop one, right? So it's kind of feed the ducks a little bit.
Yeah, depending on your time frame.
Make your shopping list.
Yeah, exactly. Make your shopping list. And right now, the focus in the gold rush, which go over every Monday, we're starting to look at not just miners, but we're starting to go further down the cap scale and look at some of these junior miners that are starting to rip. It's going to highlight a couple of silver miners today that are carving out beautiful bases and challenging those key resistance levels. So yeah, I mean, it's time to get ready. I think that's the message that gold has made very clear in the past couple months. Like this breakout is for real, and it's not just precious metals. It's metals. Commodities in general. It's base and industrial metals too. It's not just copper. Yeah. It's zinc, tin, aluminum. Just commodities in general are beginning to follow gold's lead, and they're beginning to carve out and start to catch higher in the second leg. Yep. That began back in 2020, 2021.
Aluminum has been on absolute fire as a subgroup. Silver and aluminum, top subgroups in materials right now.
Mm-hmm. And you know what? I look at this aluminum chart and I can see it chopping sideways for another 3+ months, 6 months before decisively breaking out and challenging those 2022 highs. Just like last week we looked at the material sector with that false start or potential failed breakdown after hitting new all-time highs. So it's still messy. But these commodities and these base and industrial metals are starting that next leg higher.
I like this CSTM chart for aluminum.
Are they all dancing together, or is one of them dancing to its own tune?
Huh.
I mean, they're all dancing together. I mean, zinc is really, or not zinc, excuse me. Tin's really getting after it. It's been absolutely ripping. Highest 14-week RSI reading since mid 2021.
Oh.
But yeah, tin's been on fire. Which we've talked about tin before. I mean, tin's in everything. Absolutely everything. All kinds of alloys used to coat other metals so that they don't corrode so easily.
Do you have favorites, Ian? So during commodity super cycle, is there a contract or an area of commodity stocks where you prefer to hang out if the technicals support it? Like, do you favor aluminum or tin or?
No, I actually don't trade these contracts, the base industrial metal contracts that you're going to find
the real
LME. Yeah, I don't trade those. In terms of futures, I stick to copper. But when it comes to just commodity stocks in general, it's really whatever's working, whatever's showing relative strength. And we've seen it in energy, and I think we're going to see a rotation into materials and into these more metal and mining stocks.
And these rotations that we see within the commodities complex, do they have enough legs? Like, we're not just talking about a couple days or a couple weeks here. When rotation runs its course, we're talking about multi-month rotational trends?
Yes, absolutely. I'm thinking 6 to 9 months. We're talking about relative strength rotation.
Any time to express a bullish thesis, really on any time frame.
Yes, and that's the thing with this breakout in gold. I mean, gold just broke out, a month and a half ago?
Yeah.
I mean, it's just getting started.
Yeah.
We've been waiting almost 4 years for this.
Yep. We talk about
if you would have told me in 2020 when silver hit $27,
Yeah.
that it was going to drop below $20, and I wasn't going to have another chance to buy silver at that $27 level. What, 4 years? 3-4 years? It just,
Right.
I wouldn't have believed you.
At the time, I was saying this could take quarters.
I remember when it hit 27, you were like, feed the ducks, feed the ducks. I'm like, I don't know. I think it's going to 35.
I remember
Here we
saying,
are.
like, this could take months. It could take quarters. Here we are, years.
Yeah.
You know,
So
these things could take a long time.
Look, listen. We're going to talk a lot more about this stuff
Oh, yeah,
tomorrow.
drop the
Ian and JC are doing a live event tomorrow at 2:00. I just dropped it in the chat. I'm also going to throw the QR code on the screen. If you want to hang out with us tomorrow afternoon for an hour, they're going to be talking about pretty much this exact thing, but just in a lot more detail and what their playbook is for this period.
I had AI make you guys some graphic images for your promo, so we can share some of those in recess in just a minute.
Yeah.
Oh,
okay. Let's
I'm
do that.
interested. My AI usage is in a bit of a drawdown. I have to go back to those tools. All right, let's do some recess.
Should we see it? Strazza, what do you got? What do you got for
Let me
us?
start. So shout out to the homie Sam, all-star intern. We asked AI to make us images for our gold video tomorrow, and here's my favorite one. I don't know how they know what JC looks like, but this AI, it's really good. So if you zoom in, you can see JC.
Wait, these are fantastic. This is great.
Oh,
This is
there
great.
are plenty more.
Hold on, which one's me?
Sam. So
Which one's me?
that's JC. That's JC.
I'm the guy in the cowboy hat.
He's a gold bug cowboy.
Am I the guy with the gun on top, or
No, that's Ian.
Wait,
I'm the one
Fonz,
throwing
can you go
something?
back
What
to
am
the
I
other one?
throwing there?
How perfect is that?
I don't know what I'm throwing.
Yeah, stay on this one.
That must be Mary.
Is Mary over there just dressed
This
as
is great.
Lady Liberty up there on the top? I love that.
Yeah, there's more where this came from. I
That's
don't know
hysterical.
which AI platform he's using for this, but it's a lot of fun.
Dude, so my wife
Wonderful.
and I are going
Wonderful.
to Nashville. We're going to Nashville for our anniversary. It's our 5-year anniversary, and she bought cowboy boots, right? So she's asking me if I want cowboy boots. Can you imagine how ridiculous I would look wearing cowboy boots?
You need them. I
Yes.
want to see JC and
Yes.
period.
Oh, I'm going to show up at these. I've never been to Nashville, surprisingly.
Well,
So we're gonna go. Me and my
fine.
wife are gonna rage for our anniversaries, and I'm definitely not gonna wear. I'm gonna rock J's, bro.
The ZZ Top guy is Sean.
ZZ Top guy is shot. For
Yeah,
sure.
yep.
100%.
Yep, I can see that.
A quick little shout out. I want to give a little shout out to Super Tuscans, guys. You know, I know it's very stereotypical for Americans to like Super Tuscans, but maybe there's certain stereotypes that are just right, you know? And Super Tuscans are delicious, and they pair so well with so many dishes, whether it's Italian or American or dishes from other places in the world. You know, Cuban food goes great with Super Tuscans, right?
Is it one of those wines, JC, that's hard to go wrong with? Right? It's hard to
No, like I wouldn't want a Super Tuscan if I'm having a Bronzino. I wouldn't want a Super
That's
Tuscan if I'm eating something spicy. I wouldn't want a Super Tuscan if I'm eating you know, maybe like a chicken. I suppose you could. You know, I want Super Tuscans with like maybe like a pork, like maybe a heavier dish, you know, something like that. But it could go, it's a wide range. So I'm being a little bit harsh on Super Tuscans, but I highly encourage it. You know, it's a cliche that Americans love Super Tuscans or whatever because they have like an American palate. I don't give a shit. They're delicious.
All right.
So
Cool.
Super Tuscans are just more fruit forward. Is that?
I mean, they're bigger bombs. They're just bigger wines when Old World tends to be a little bit softer. So they're going to be more American. Typically they're blending Sangiovese with Cabernet Sauvignon. You know, so they're going to be more American style, I suppose. But so what? Awesome.
All right. My recess is I'm hosting my very first Passover Seder tonight. We're hosting 9. I think we talked about this on Friday. Hosting 9 people. The in-laws are already here. The parents are coming. My aunts. It's going to be a big day here in the Israel household. So, happy Passover to all those who celebrate, and
I have a
to
question.
all my non-Jewish
Spencer, quickly,
friends who
'cause I have a
love
lot
the
of Jewish
taste of
friends.
matzah. Here, this is for you.
Can I ask a quick question? I have a lot of Jewish friends. Are you the type of Jew that sits there and that's your dinner for the night, or are you one of those that gets McDonald's on the way home?
I don't know any of the latter.
No, because Passover is not known for the fabulous cuisine, right? So I have a lot of Jewish friends that don't get McDonald's on the way home.
No, that ain't me. Although I will say, thanks to Phil Perlman, now that I have far fewer carbs in my diet, Passover is much easier because I don't really eat bread these days, and you can't eat bread on Passover. So my diet's not really going to change a whole lot. I'll still eat eggs, still eat beef, still eat bacon, and that'll be.
What's your favorite part of the meal?
The fact that so there's a bit of a service that you do like with the meal, and the eating part only happens like halfway through. So the favorite part is always when you get to the part where you can eat, because it takes like, we have a book, and it takes like 20 pages to get to the meal. You got to go through all the other stuff first, and then so just getting to the meal is an achievement. The true test of a Seder is, do you finish the Seder after the meal? Do you keep going, or do you just say, all right, we ate, we're done? In my family, we just say, we're done. We ate, we're good. Everyone can stop now. But
good insight, Spencer. I appreciate that.
Yeah.
Appreciate that.
Yep. All right. That's what I got.
Hold on. Throw this chart up.
What do you got?
Shout out Madison Square Garden. Very exciting for city people. New York Knicks, playoff basketball. New York Rangers, playoff hockey. And shout out Billy Joel. Just had his 100th garden concert. And it was on television, which is fantastic.
Shout out, Billy.
What a lovely concert. Billy Joel, Knicks, Rangers, all bringing it for city people.
What's not
for the record, that song was not about Allentown. It was about Bethlehem. It's just that Allentown rhymed better.
JC has great Joel fun facts.
Fun facts. All right, guys.
All right.
Adios.
All right. It's Monday. We got the Flow Show. Strazza and Sean coming up in 11:30 Eastern Time. Speaking of Strazza, Sean missed it. Hop on over to YouTube to our channel. We have a brand new show with those guys that on Friday, off the charts. They had a conversation with Jay Woods a few weeks back. Check that out. The Flow Show, an hour and a half. And thanks to Jeff Hirsch. We'll see you guys down the way. Go make some money. Have a good one. And that's what we got. See you.
Adios.
See you guys.
I can't take no